Hello everyone. Last week I asked you this question: why isn't the market crashed yet? And I discussed some of the reasons. People are not moving because they have locked into a very low interest rate, so a lot of sellers are opting to stay put. The second fact that between 2008 and 2012 there was a shortage of new development. And lastly, the fact that the baby boomers are living longer, which is a good thing. But it has created a situation where generations are competing for the existing household stock and not enough new houses are coming up. So apart from this, what are the other factors that are responsible? That's what we're going to talk about in today's video. But before I do, my name is Preeti Rao and I am both a real estate and a mortgage broker for close to 20 years. So do me a favor, please hit that subscription button, hit the bell icon, and please hit the like button so more people like you can see these videos. It really means a lot to me when you hit the subscription button. It gets me motivated to keep you up to date with everything real estate. So first, let's talk about the gap in the construction of affordable housing versus average housing. And this, in my opinion, is where we are going to see a significant housing boom in the next 10 years. More affordable homes that are of reasonable size are going to be built. And this creates an opportunity, especially from a real estate investment perspective. If you are the type of person who wants to invest in real estate, the opportunity is clearly in affordable housing. If you are smart and you can get into this building boom right now, just like Warren Buffett did when he bought a significant amount of shares in different home builders, well, there's an opportunity to become very wealthy off this gap. Now, that doesn't necessarily mean that you want to buy these homes with the expectation of holding on to them for long term and seeing them go up in value significantly. That's not what I'm saying here. The money to be made over the next 10 years is in the actual creation of these homes, because even though the market isn't crashing right now, it is correcting itself, and it seems that the next 10 to 15 years are probably going to be the period of stagnant growth in the real estate market, especially from the price perspective. But the fact that the market isn't crashing doesn't mean that corrections haven't happened and that crashes cannot happen either. And there's some things that you can watch for in order to see the crashes coming before they actually do. Keep an eye out on the unemployment rate. Now, in periods where there have been a significant market corrections or market crashes, those crashes are almost always led by rising unemployment, which, by the way, is basically produced due to higher interest rates. Just keep that in mind. So if you go back and you look at the crash that was there in the 1990s, you can see that the higher the unemployment went, more the market dropped. If higher interest rates cause companies to start cutting jobs and that trickles down through the rest of the economy, we see a significant uptick in unemployment and can pretty much be rest assured that we will see a decrease in home values. The reason why is because when people don't have money to make their mortgage payments, they tend to go into delinquency and then power of sale. Now, if we find ourselves in that situation where that happens, that could lead to the next domino effect, which is investors offloading properties as the market turns. And there's no question that we've seen an increase of investor activity over the last couple of years, which means there are properties that are being held by real estate investors that in the event that the market turns could be offloaded very quickly. And if this happens, it could mean an influx in the real estate inventory, which could put excess downward pressure on the housing prices. The other factor that happens actually only in the US, but it does have a major impact on Canada: banking collapse. As of right now, the reason why the housing market hasn't crashed in Canada is because our circumstances are way different than in the US. The lending policies are different. Household formations are different. The lack of supply is different. And different doesn't mean safer. It just means different. So the reality of today is that if everything stays the way it is right now, we'll probably see an extended period of time where housing prices are kind of flat. Local markets may have corrections, but don't filter through the rest of the country. but in general, it's going to take something pretty big and something very similar to what happened in 2008 in order for the market to actually crash in Canada. So tell me if you think my thought process is correct or not. Once again, my name is Preeti Rao, and if you still don't know who I am, please go check my rating on Google and read my client reviews. Till then, take care. And if you found value or liked this video and would like to see more content, click on the boxes on the screen. My contact information is in the description box below, and make sure to hit like, share, subscribe and that bell icon so you don't miss any of my future videos. Thank you so much for watching, and don't forget to call me because I hold the key that opens a door to your dream home.